Good morning, ladies and gentlemen. How's everybody doing today? Thanks again for tuning into a stream. So right now, just got the screen share going, no camera. Actually figured out the problem. Thought it was fixed, but it's not. It's all good. Anyways, here we are. Another good day. So what we're definitely going to talk about is Tesla this morning. So let me actually put up. I'll keep this one over here. So on the left here, we have the SPY, right? So the market gapping down overnight again. So getting pretty bearish here with the market. Once again, kind of on a bear move. Big gap down this morning. So just keep your eyes on that. The market is going to be down today to start. And Tesla got absolutely smoked overnight as well. So Tesla's down into will hit the 181 price. So it didn't quite get to 180, which is a big level that a lot of people are watching, along with 178, 179. So we did in fact get down to 181, which was quicker than I thought it would happen, but here we are. So a lot of people are probably watching Tesla short this morning, but I'm going to be keeping an eye on Tesla long. So what I'm actually looking for today on Tesla is something similar that we had a couple days ago, like right here when Tesla was going down from 220. Then it got all the way down, I think it was like 195. Yeah, 195. We had this like really quick initial panic sell early in the morning as soon as Tesla opened, and then it just squeezed. So I'm looking for something similar today where hopefully it doesn't squeeze right now. Hopefully it actually kind of fades back out. And this morning it goes through a really big panic sell-off down into 180, a little bit lower, and then maybe starts to squeeze up. So going to be long bias Tesla today, okay? Going to be long bias. What we've been following is Tesla down at this price right here. It's basically there. So, I mean, you can't really ask for too much more, 180, 170. I mean, it's already in the dip zone. I mean, like very heavily right down here, right? We've already reached there. That's the spot that maybe I can do this on a, no, can't do it. Never mind. But that's the level that a lot of people are watching. So I'm not really short bias into this down drop anymore. I'd rather start being long bias. And so people asked yesterday if we should be long, and I was like, no, I'll probably be short yesterday, in which it ended up kind of fading out the whole day. So again, I'm more long bias Tesla today than short. Okay. Yeah, Tesla's could very easily squeeze. Definitely known to squeeze. All right, next on the list is WB. WB is an earnings play that went from about 51 down to 44. If you go back about 3 years, you'll find that it's got a pretty decent support system right down at about 40. So going to try and see if this just continues fading out short bias. So going to be following WB short here and see if it continues to fade out down towards 44. Okay. And that's pretty much the two stocks that I was going to watch. I mean, pretty straightforward. Earnings play, gap down, right? Going to see if we have continuation down to about 40. Tesla overextended to the downside into support. See if we can squeeze it up. A lot of people have been shorting the stock. All right. Mind you, if you just take a look at the market right now, just went through a nice little push, nice little squeeze back up here. All right, so kind of came out of consolidation, got a small push. Could be news related, could not be. 826. Yeah. All right, so those are the two stocks I'm watching. Of course, I'll be looking. I'm always keeping an eye on Netflix, usually, and some other large cap stocks. But if you look at any large caps today, they should have all gapped down in relation to the overall market. So any of the bigger name stocks you've looked at, most likely all gapped down today because the market's gapping down. So just keep that in mind as well. Okay. So two main stocks, WB and Tesla for today. And of course, keeping a strong view on the overall market. If the overall market does get more bearish today and continues down, consider trading something like TVIX or even UVXY. These are inverse volatility ETFs. So if the market goes down, these will be going up due to the volatility increase in the overall market. It might even be a good idea to take a look at the VIX this morning. So the VIX, of course, is up, pushing the 16 level. Yeah, nothing too crazy, but it is pushing up. All right, guys, so again, WB, Tesla, main watch. Something else you guys might want to keep an eye on is N-Bev. Now, I don't know if we talked about this yesterday. We might have on the stream, but we did send this out on our email watch list, which was N-Bev, to keep an eye on this. Long story short with NBEV, it's been down here consolidating over 5 for a long time, couldn't break, and then 2 days ago it starts to curl up. So we ended up getting long in a swing there, and it started to work pretty well. And we did send it out in our free email watch list. I know we did that yesterday. So anyways, yesterday had a good run up, $5 up to $6. And so on. And so again, just kind of here watching N-Bev. It had a really nice move yesterday. Had two good days really for the stock. Daily chart starting to form pretty clean, nice curl. Same thing with the 4-hour, nice curl off 200 moving average, just above 5. Would really like to see this obviously pick up and head towards $10. Will that happen? Probably not, but I think in the near-term future, it's possible we could see this up towards, 613, even up towards, 650 in that zone. So keeping a close eye on this. We've been watching N-Bev for a couple weeks now, or actually more than a couple weeks. So again, that might be something you guys are interested to keep an eye on too. So when I trade, sometimes I'll do a limit order, and most of the time I'll do a market order. And the reason being is I use this over here religiously. I use depth of market. I don't hardly look at it, but I do look at level 2. But a lot of times I'm really looking at depth of market. And as long as you understand where sellers are located and the buyers are located and the difference in the spread, I do just fine. Right, every once in a while I probably would make a little bit more money if I do limit orders, but the amount of times that I've missed trades trying to do a limit order, it's just ridiculous. See, what most people don't even understand, some do, but some don't, is the market makers make the spread. Remember, market makers make the spread. So as soon as you put an order in above, so I wish I had my drawing tools right now, but I don't. So let's see if I can draw over this. Can I? No, I can't. But anyways, let's see if you guys will understand this. Right? As soon as I go to put an order in here at $5.56, the market maker is going to jump up to $5.56 and he'll kick me back in the line. And if I jump to $5.57, he'll jump up and put me behind him. And if I go up to $5.58, then he'll jump up and then I'll be behind him. If I go to here, he'll go there. If I go here, he'll go there. He'll basically run me all the way up to where the market price is at, till a point where he'll stop jumping me because he goes, okay, we're charging you enough money on these shares. You can have them. I don't want to buy them there. right? Same thing vice versa, right? Let's say I was long, right? If I was long 100 shares on Tesla, or sorry, no, if I was long a couple hundred shares here on N-Bev, right? And I wanted to sell, well, actually, I'll do it here. If I wanted to sell at, 559, okay? And I go to 558, he's going to jump me down to 558. Then if I jump to 557, he'll jump me to 557, all the way until he goes, okay, this is too low for me to sell shares at, you can sell them here. And then he'll let me sell my shares, which would basically be the same as me putting in a market order. Okay? That's what most people don't even understand what's going on in the market when you're trading like this. You could put in a limit order like here. Okay, like yesterday. You could put in a limit order to sell at this red dotted line. Like I could have put in a limit order to sell here, right? I'm already long from yesterday and I got a limit order to go in at 556. So as the price goes up to 556, yeah, sure, I'm probably going to get filled. Why? Because the price went over 556. So somebody was willing to pay $5.56 per share, so they purchase them from me because the price is going higher, okay? But if I were to do it like this, if I knew for a fact the top was 565, okay, and I put an order to sell my shares at 565, there's a good chance they would have never gotten filled even with touching 565. Because the market maker has to be the first in line on the bid and the first in line on the ask. And as soon as someone jumps their bid or jumps their ask, they will then move their price because they have to be first in line on the bid and first in line on the ask in order to create the spread. So if I put an order to get filled at 565, knowing that it's the absolute top for N-Bev, okay, and I put an order in there, as soon as the price action gets there, the market makers will jump on the ask and they will put their orders all in at 565. And if you want to sell your shares, you're going to need to decrease below 565 to 564. And as soon as you do that, they will jump your order down to 564 and say, now you need to go down to 563. Meanwhile, the price just keeps decreasing. So am I really going to try and get a 565 fill when the bid-ask spread is from 563 to 565 and I could just market order out and either get a fill at 564, 563? So I hope that makes sense. Is anybody confused on what I just explained there? Anybody got questions? I'm literally waiting for answers. So if you guys have questions, you probably ask them now on this topic before we move on and start asking some other things. That is, you guys still might be confused, but that's exactly how it works, right? So what's the solution? There is no solution. You will never beat the market maker. Well, not that you'll never. That's a wrong way of looking at it. What I'm just saying is, if you want to get the absolute, you can't. You just can't do it. There is no way around it, so to speak. You'll get lucky every once in a while, but that's just it, right? If you think that this price here at 560 is a good sell point, you can put a limit order. You'll get filled because the price goes above 565. But if you're trying to catch the absolute low and absolute top, it's most likely never going to happen because the market makers create the spread there and they want you within their spread. They want you trading within their spread. No, not a student of Jason Bond. Absolutely not. Dark pool is the answer. You don't have access to dark pools, unfortunately. I don't really trade options all that much, but I understand them pretty well. Well, no, it's just Josh. When a brokers sell your order flow to people like Citadel or high frequency trading companies. So as soon as you go to purchase an order, that order flow is electronically sent to some other trading firm, and they get to see your order flow. Basically, they're going to go and purchase shares with their high frequency trading computer so fast at a price below yours, and then they're just going to they're basically middlemaning you shares, right? They go, oh, this person wants to buy a Ford Focus. Okay, let me go race around and see if I have a Ford Focus in inventory, or if I have a Ford Focus, that I can purchase really fast, turn around and sell it to this guy for a quick profit. That's what high frequency trading companies do with order flow. Market makers are people. I love. I can't. I really don't understand. No, I don't get sponsors. No. Patrick, already have a video out there like that, my man. Do I still trust Robinhood? Yeah, I've always trusted Robinhood. Robinhood is always a trust. I mean, they're just a broker. There's nothing wrong, nothing illegal, nothing shady that they do. It's all within the legal guidelines. It's usually just users of the brokerage that are unaware of how the system works that feel that Robinhood screws them over on trades and this and that. So no, Robinhood's completely fine. I do market orders all the time, and I do just fine with them. But yeah, if you can, right, with your trading style, it's always best to do a limit order because it gives you a little bit more control over the price you want to pay. Yes. Beyond Meat, vegan foot soldier. Already watched that stock, but we can take a look at it. I'm sure it's probably doing something interesting. Yeah, down to 76, so not surprising. Would anticipate. So it did, in fact, have a green-red push. Yeah, I'd probably still be bearish on the stock myself. I'm really not long biased that. N-Bev is not trending. I love Dialga. I couldn't. If you don't see the value in N-Bev, it's hard for me to explain. I still think you have a little bit of a learning curve to go over there. UGAZ and DGAZ, I don't know, one of them got smoked the other day. One of them's trending up. I hardly trade those. I basically get in between. No, I mean if you do a short position, you sell to get in, you buy to get out, and I do market orders more often than I do limit orders. I think I already looked at you guys. I'd probably be more bearish on that, honestly. And it's guys, it's not. Remember, more importantly, it's not you guys. It's the natural gas market, right? So, again, this right here, the price action you see here on you guys has nothing. It doesn't even matter. It's the futures market. It's the natural gas market that you want to pay attention to. This dictates what you guys does. So it's not you guys at support. It's natural gas would be at a support, which there would trickle over into the ETF. So Sure, you could get away with just looking at you guys, but you really want to pay attention to the natural gas market there, because that is what dictates the price movement for the most part of the ETF UGAS. And UGAS is actually, it's not even an ETF, it's an ETN, it's an exchange traded note. Any advice on using Squawk Box? Not really. It's been a long time since I've even tuned into it, but yeah, I have no advice there for you on that. Do I like Amazon? Yeah, I like the company. Absolutely. So why would you choose options over stocks? Because options, you can leverage your money with less money, which means you can make more money with less money. And there's limited risk with options. It goes both ways. There's great risk, there's limited risk, just as in anything, right? But if I buy an option for $100 on Netflix and Netflix drops $300 a share, the most you could lose with your option play is $100. Again, if you buy one contract, long biased option play on Netflix for 100 Benjamin Franklins, right? $100. Or, well, sorry, 100 George Washingtons, excuse me. But one Benjamin Franklin, $100 is all you spend for one contract option play, long bias Netflix. You wake up tomorrow, and instead of Netflix going up, Netflix drops $300 a share. Your option will lose all of its value, but it's only going to lose $100. If you were to buy 100 shares of Netflix at 300 something bucks, right? You're going to end up spending like $30,000. If Netflix drops $300 a share overnight, you lose $30,000, whereas your option loses $100, right? Or vice versa. If you buy one share of Netflix at 300, it drops $300, you lose $300, and your option only loses $100. So there's a limited risk. The limited risk factor is you can only lose the amount of money you put in or pay for your option, which is the same with stock. You can only lose the amount of money you put in, but it's seen as a little bit different, right? That's basically it. ETN is exchange traded notes. It's actually, I got to refresh my memory on ETNs. Those are a little odd. I'm more up to speed on ETFs. ETNs I haven't looked into in a long time. The mechanics of it are a little bit different. That's what you have to understand. And ETN mechanics are just a slight difference between ETFs. That's basically it. There's a small difference there. I can't remember it honestly. What's going on with Ricky? I don't know who that is. Sorry. Not sure. No, I'm kidding. I don't know. Over 100,000. What's my opinion for opening a certificate of deposit? I mean, they're not bad, but I mean they're really not bad. They're not bad because you make money, but then your money's just locked up for a long time, which is the same with a Lamborghini, or not, which is the same with, I don't know, I was thinking of a Lamborghini there, which is the same as a bond. Ideally, if you're going to do a certificate of deposit, you have to be able to justify why you're doing a certificate of deposit. If the interest rate that you're getting back for the certificate, right, it well outpaces inflation, then yeah, maybe it's a good idea. But it's like, a certificate of deposit, I could put $10,000 in one right now. They're going to give me like a 3, maybe a 4% return. So, is it okay? So I'm going to make on $10,000, I get a 4% return annually. So I'm getting And let's say if it was for 5 years, so 400 annually, 4 times 5, we're going to be getting $2,000 over the course of 5 years at a 4% return on $10,000 in this certificate, while inflation is at 2%, so that 2,000, right, that 2,000 goes down to 1,000 after 5 years. So in a certificate of deposit with $10,000 returning a 4% return rate over 5 years, you end up coming out to about a $2,000 return, with inflation continuing at 2% for the term of 5 years. You'd end up only making $1,000, whereas you're probably better off finding a legitimate, good retirement account that offers at least 7-8% return, maybe 10% return. That way you're actually, so imagine doing 10% return on, $10,000. It's going to be far greater, 10% return on 10,000 is going to be $1,000 over the course of 5 years. You're looking at 5,000 with inflation at 2%. So again, no, they're really, in my opinion, they're not that good. Maybe depending on the circumstance, you might be able to justify it at some point in time. But for me, I've really never been able to justify a certificate of deposit. I hope that was not too fast. With that being said, guys, it's 9 o'clock. I'm going to get back to our private trading group. So sorry for not being able to stick on much longer, but thank you guys once again for tuning in. First link in the description, that is going to take you to Trader Facts. That is a place where you can start tracking your trades from different brokers. So feel free, first link in the description, go to it. We have like 90 slots available before this round of baiting testing is over. So you might as well get in. It's absolutely free. Just do it. Just go there. First link in the description, please. Okay. See you guys tomorrow.